Good morning, everybody. I'm here with Richard Vandenberg. He's fund manager Asia property at M&G Real Estate Asia. Welcome, Mr. Vandenberg.
Thank you.
I'm going to talk now a little bit about Asian property, which is quite an exotic topic here at INVESTMENTexpo. In Europe, the cut of the interest rates of the European Central Bank was a big topic last week. So what is the situation with regard to the interest rates in Asia and Asian property? Is there a discussion? Is it a big topic?
It is a big topic, right? Interest rates going up or going down have, as you say, immediate impact on the value of properties. But if you look at Asia Pacific, it's very diverse. And I'll just mention the two extremes. Australia, Japan. Australia interest rates are 5.5% to 6%. They're not expected to go down anytime soon, maybe next year, but it's not yet on the card. Inflation is still very high in Australia, and that has impacted the property market. The values clearly have come down as a result of those interest rates being high. The other part, Japan, interest rates have been going up as well, but their interest rates are around 1%. Inflation is around 2% for Japanese. That is shocking. But there you still have a very positive spread between the interest rate and yields. Yields are between 3% to 4%. So there, the increase in interest rates did not have an impact on values.
Okay, so we have a more diverse picture than in Europe.
It's a very diverse market, yes.
So maybe my next question is difficult for you. What is the general outlook for Asian property?
Well, if you look at Asia, right, again, it's very diverse. So let me talk about the developed countries in Asia: Japan, Korea, Singapore, Hong Kong, Australia, and New Zealand. Economic growth is very high in comparison to Europe and in comparison to the States, although clearly the US this year has a spike, which means that it directly results in demand for real estate. And that's what we've seen over the last 20 years. So the balance between demand and supply in general in Asia Pacific is very favorable. And you can see that also over the last 15 years, the volatility of real estate in Asia is far less than the volatility in Europe and in the States, again, for the developed markets. So you called Asia exotic. In fact, to a certain extent, from a real estate perspective, it's the opposite. It's very stable, volatility is less, and with that also, risks are lower. And that's quite different from what a lot of people perceive to be the situation in Asia.
Are there countries or asset classes where you see specific opportunities? What is exciting for you at the moment?
Again, I'm talking about the developed countries. Where there are exciting opportunities is where the rise in interest rates has seen a revaluation downwards. And that is in Australia, and that's starting to happen a bit in South Korea. In particular, in the office sector in Australia, prices have come down around 20%. We expect another 10% by the end of this year, and that means that thereafter, pricing is attractive to step in. On the logistics side, we've seen cap rates going up as well, but that has been mitigated by increase in rentals and income. We believe that's coming to an end. We also think there on the logistics side in Australia, there's another 5 to 10% downward valuation, which means that by the end of the year, beginning of next year, we see good opportunities to step in.
If you look on European institutional investors, so my impression is they're not invested a lot in Asian real estate. Do you perceive there's something like a change? Is there a shift towards more investing in Asia?
Right. So the first Europeans came to Asia to invest around 20 years ago, 25 years ago. In fact, the Germans have been very entrepreneurial in that sense, the Dutch as well. I've seen that increase steadily over the years, and where initially the allocation from pension funds was around 3 to 5%, that allocation to Asia now has been increasing to around 10 or even 15%. So, in fact, there's quite a lot of capital, European capital, in Asia Pacific.
Okay. Mr. Vandenberg, thank you very much for this insight.
Happy to do so.